Today, I want to take a closer look at three stocks that I believe are sitting at attractive valuations after this massive downturn. I mean, today was another crazy red day. We had Nvidia down roughly 5%. We had Meta down roughly 4%. We had Tesla down 5.6% on the day. Now, let me just preface by saying I do believe the stock market will continue to get to be volatile, right? There is the possibility of prices going lower and lower. But as a long-term investor, I'm always looking for my risk to reward ratio to improve. And as stock prices go down, I think that is getting better and better. Now, I'm going to just give you the three stocks right off the bat. And the three stocks are going to be focusing in three individual markets. First is going to be a software play. Next, we're going to see kind of a huge AI giant. And we're also going to see a cloud giant as well. So the three companies are going to be Synopsys, Nvidia, and Alphabet. And if we take a closer look at forward PE ratios for all three, I want to say they don't look as crazy. Synopsys, this is going to be a software play, and I'm actually going to save this for last, but it is the most expensive. Normally, software companies trade at a higher PE ratio valuation. Now, if we look at Nvidia, this is going to be the first one we're going to take a closer look at, and on a forward basis is sitting at around 24.5. Now, the final stock is going to be Alphabet and aka Google. This one has a forward PE ratio of less than 20, sitting at 19 right now. And I believe this is going to be one of the best performing cloud provider in 2025 because of huge growth potential. Now, in today's episode, I kind of want to just share my overall bullish points. I'm obviously going to talk about some of the bearish thoughts about the companies and why we might see more volatility, but it's going to be focusing more on the growth opportunities. Also, if you want to learn more about the semiconductor space, make sure to check out my free daily semiconductor newsletter, whatthechip.com. The link is down below.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's start off with Nvidia. And Nvidia today ended the day at around $111, and we can see from its 52-week peak, which was about $153, the stock is down over $40 and is down over 26%. So we are kind of a lot in heavy corrections territory for a lot of semiconductors. Now, Nvidia to me is going to be the giant as AI continues to evolve. And this is going to be the main bullish thesis. If one is looking for the true AI king, I think Nvidia is going to be the one that can completely continue to dominate. Now, if you don't believe AI is going to cause big tech to continue to invest heavily, then Nvidia is not the stock for you. But a few bullish points that I want to bring up. Nvidia was on March 3rd, was at a healthcare conference, and Kimberly Powell, the vice president of healthcare, mentioned that there is this $3 trillion of operating expense and labor that goes into the healthcare industry. And that can easily be a couple of hundreds of billions of dollars in what they call AI factory, AI infrastructure to support all these AI agents, supporting the robotic surgery of the future and supporting the digital biology labs of the future and supporting all of our healthcare workers. So this is a gigantic opportunity. Obviously, you might, in AI, there could be various growth opportunities and various markets that can balloon the amount of demand for AI compute. I just wanted to show one example, and that is the healthcare industry. Now, there was a most recent conference as well, and this was on March 5th at Morgan Stanley, and this was by Colette Kress, which is the CFO of Nvidia. And there was a discussion, and Colette was saying that one of the biggest issues happening right now is the market asking, are we at a peak? Are we at the peak of what we're going to see with AI? And she mentions that knowing that the install base of general purpose computing needs to be transformed to accelerated computing just to manage the significant amount of data, but also to deal with the needs of AI and what AI will be for us in the next decade. So there's $1 trillion of installed base. There is more than $1 trillion in terms of focus, in terms of AI. So is this it? Absolutely not. Is there still growth coming out and in front of us? Absolutely. So obviously the CFO is going to be very bullish for their company, but overall we can see if you believe AI is real, we can see the opportunity is still massive. And again, we get a lot of uncertainties. And the reason NVIDIA stock has kind of seen a huge volatility is the uncertainty with things like DeepSeek, the uncertainty with data center spending increasing, the uncertainty in AI investment. Now, I don't have the quote here, but Jensen has pretty much says that his hopes and dream is that AI becomes so cheap that you have these AI factories running tokens 24/7. And that is still we still haven't hit to those levels. And that's where the growth opportunity is going to continue and continue. So NVIDIA is going to be my first play. And normally, even though I do NVIDIA episodes almost on a daily basis, it's very rare for me to say that I would add at these levels. NVIDIA below 120, below 115, right now in 110. I believe my risk to reward ratio is a lot better. Now, again, I'm not saying the stock can't go lower. It can definitely go lower, but I'm liking it for the opportunities of the future. Again, if you don't believe in AI and if you believe AI is in a bubble, that's definitely not the stock for you. Next, we're going to take a closer look at Google. Google has become one of my favorite stocks in a long time from the big tech seven outside of NVIDIA. So we can see Google right now from its overall 52-week high, which was around 208. The stock is down nearly $30, over $30, and about 16 to 17% from its peak. Right now, what gets me really excited about Google is we saw its valuation is super cheap. But to me, the cloud growth is something that the market is underestimating, in my opinion. Right now, we have heard that the AI market is creating more demand in AI infrastructure than there is capacity. And if you had more capacity, you would be able to grow at faster levels. Now, Google is one that has the benefit of having their own TPUs and be able to grow from both their own solutions and NVIDIA solutions. So I think the one out of the three big cloud providers that can grow the fastest, in my opinion, is Google. And here we can see from Alphabet's CFO at a recent conference on March 4th that Google Cloud grew about 30% in the fourth quarter, which is lower than the 35% they've experienced before. But one of the main reasons is if they've seen very strong demand from customers and didn't have the capacity to match that demand. But they mentioned they ended the year with more demand than supply. So again, I think Google and with Broadcom just reporting, and Broadcom is actually seeing some huge growth in AI revenue, I'm going to guess Google is loading up the truck on a lot of TPUs as they build out their infrastructure, which is going to be great for the cloud market. And they kind of talk about their TPUs here. So they do have the benefits of having TPUs, which is their own AI accelerator, and GPUs when we make those capital investments. TPUs really power their internal efforts. And then for cloud customers, they have the options of TPUs and GPUs. And the great thing is Google has Gemini, right? Alphabet has Gemini. So if more developers start to use Gemini is actually pretty good for their TPUs because that is kind of their internal workloads. So if this AI market continues to evolve, if more developers go in Gemini, we are going to see a growth, in my opinion, in the cloud market share for Google as they're going to increase their investments in TPUs and they're going to increase their investments in GPUs. Now, the third company I'm going to take a closer look at is Synopsys, and this is ticker SNPS. Now, this is one that's probably not as popular as some of these other semiconductor stocks, and we can see from its overall 52-week peak, which happened around summer of 2024, the stock is down over 28%. Now, like I mentioned, this is more of a software play. For those that are not familiar, Synopsys is a software company that you use to design a chip and to kind of run simulations of this process. Now, because it is in the semiconductor market, many feel like it follows the same cycle. That is not true, as even though there might be a bad cycle in the semiconductor space, they always need to do research and development for their next solution. So Synopsys is one that is more a software play, but I like it because it's in the niche of the semiconductor industry. So here they kind of talk about the different industries that they hit. And in my opinion, as AI continues to evolve and create more unique products, we're going to see those products enter all these types of industries. We're going to see more circuits, more components needed for IoT, Internet of Things applications and devices. So I do believe there's going to be a nice tailwind for Synopsys. Now, the second thing is Synopsys has a lot of IP that they license out. So let's say you are a chip designer and you don't want, there's certain parts that you don't really need to improve, and you can kind of just license that from Synopsys. So again, as we continue to see more innovations and more technology adopt AI solutions, I do believe Synopsys IP portfolio can continue to grow. Now, the other thing is this is one that kind of evolves with AI as well. Their core products, which is the software design application, because they have so much data, they're able to implement AI to increase their core solution and be able to increase things like subscription pricing. So this is definitely, in my opinion, one that can benefit dramatically. Now, I'm just going to look at gross margin. Synopsys is the highest out of the bunch, and we can see historically it trades within that high 70 ratio, which is pretty impressive. And it's great to see in the past 5 years that hasn't moved much. Now, for Alphabet, this story is the same. While it is improving, it kind of trades within those high 50s. Now, the only outlier here is kind of Nvidia, which is interesting, kind of bouncing off between the two. I do believe we will continue to see maybe some pressure on gross profit margins for a bit, but regardless, it is always, in my opinion, I think one of the bearish theses is, look, Nvidia is going to lose out on this gross profit margins. It's going to go back to its normal levels, but its normal levels are usually above 60. So obviously, it's definitely a pain, but it's not the crazy bearish story if we get back to those lower ends. I think we're probably going to stay somewhere around, if we go down, it would go down to more closer to the 70s, but there is also the possibility they'll stay high in the mid 70s. So overall, these are the three stocks that I believe are great for me to add to my portfolio. And once that, I think during red days like this, creates a better risk to reward ratio. Again, this doesn't mean that the stocks won't go down and that these are sure winners. The market can change dramatically, and obviously a lot of these depend on the innovation of AI. So it's important to understand those risks. Now, would love to hear from you, the viewers. What are some of the stocks you might be planning on purchasing during these downturns, or what are some of the stocks you bought recently? Take care, have a good day, and see you all next time.